Well, the Nashville housing market has been nothing short of bizarre since 2022. I'm going to show you a way to look at these real estate cycles that's probably different than any other way you've looked at them. And we're also going to look at a Case-Shiller-style index for the Nashville housing market, both on single family and condos. But first, I want to do a quick Nashville housing market update. So when we look at Nashville, I examined 1.5 million transactions. That's in Davidson County. That's in the heart of Nashville right here. That's what we're going to look at when we do this analysis shortly. But when we talk about Nashville, most of the time we're talking about Greater Nashville. It's the 9 counties surrounding Davidson County too. And what we see is active listings on the single family side. We're at 9941, 7.8% higher than where we were last year at this time. We are seeing more growth than we saw last year. Last year it was very flat. We are seeing growth. Very important for the direction of this market if we get a new high. We peaked last year in July. This year, it looks like we may continue building on inventory. Very important. Okay, let's look at contracts. We are down double digit in contracts for single family. Now, in condos, we're actually up, but not nearly the amount that we're down. This is a very, very large drop. This is such a large drop, and it's been going on for so long. This is material to the full year forecast of transaction volume in Nashville. I think this is economic. This is an overlay of retail sales with housing market data from Nashville. Okay, what you can see is a very strong correlation with the direction of housing market data in Nashville and the direction of spending nationally. Something flipped in July. People spending money really stepped on the brakes in July. Now, there's still a ton of investment coming from data centers, and I'm not saying that there's not other things pushing the economy forward. There's so many things I don't understand about this economy. But if I had to guess, I would say consumers slammed on the brakes in July. There's a lot of information coming out next week. The NAR pending sales report. I'm going to be paying very close attention to that. I've never cared about that report before. I think it's important to watch. Redfin is showing pending sales down. The pending sales are, to me, indicative of consumers really slamming on the brakes. You can see median sales price is flat. Median price per foot, very flat. So we're not seeing any real change in price yet. But again, these are for closings. These were, 4-6 weeks ago. They're not really telling us what's happening in the market, what's going on our contract in the market right now. But even median contract price and median contract price per foot continue to be basically flat to last year. When we look at price cuts, we're starting to see a dynamic shift. If you zoom in, you can see we're starting to increase. The real question here is, do we go above 41%, which is kind of where we peaked last year. We peaked at 41% in October. Price cuts as a percentage of active listings is a great gauge to understand the temperature of sellers. Davidson County is in its 4th loss cycle since 1980. Now, what is a loss cycle? This is really just counting the number of transactions that sold for less than their previous purchase. And what we see is that it's very cyclical. Shocker. And we can see how extreme it gets from the 2006 to 2012 cycle. Each of these cycles, it's really important that you realize that prices as measured by median or by Zillow home value, or even if we used a Case-Shiller, don't necessarily fall. For example, if we looked at this repeat sale, let's do 3-month average, it kind of smooths it out. What we see is that 1985 to 1990, that first cycle, we did see negative home price growth, which, by the way, these are massive drops. Whenever it goes negative like that, that is a big deal. And we saw condos just get crushed, but really from 1989 all the way to 1992 before recovering. What's interesting about this is in the 99 to 2000 cycle, okay, so if we look at this one, 99 to 2004, we saw thousands of homes sell for less than their previous purchase. It's really important that you realize that. Thousands of homes sold for less than their previous purchase. When we look at a repeat sales index, we never saw negative home price appreciation. If you had Zillow back then, it would have not dropped. Based on median, it would not dropped. And yet thousands of home sellers, really 4,500 from what I can tell, sold at a loss from their previous purchase. This is what we're seeing right now in the 2022 cycle. If we go to the 2022 cycle, single families in Davidson County, flat, no appreciation. Condos have dropped almost 10%. And yet, when we look, what we would find is that even with flat prices, we're starting to see losses piling up from a very low number. 0.8% of the transactions in 2022 were sold for less than what they were purchased for in a previous year. Keep in mind, this is Davidson County. This is single family and condo. Virtually no properties in 2022 sold at a loss from their previous purchase price. Coming into 2026, we're projecting almost 10%, 1 in 10 homes. These are repeat sales that sell in 2026 will sell at a loss. Now, I had such a hard time believing this that I dug into the 352 losses that we've seen so far in 2026. And here's how they skew. The lower the price band, the higher the risk of a resale loss. It's also much higher risk in the condo. That being said, there is some noise in this data. For example, if an HPR set was bought for $700,000 and then each one sold for $400 each, it might show up as losses. This data isn't perfect, but the trend is real and the narrative fits with what we've been seeing and experiencing in Nashville. We are seeing a lot more losses, and especially when you get into the condo space. Now, when we look at condos, what we see is 49% of condo resellers right now who bought after 2022 or later, they are losing money when they resell their condo, 49%. To me, I'm shocked that it's not higher than that. You have a coin flip on whether or not you sell at a loss if you bought a condo 4 years ago and you're trying to sell today. This is not about canceled or expired. There's a lot of people that can't sell their home. All of these cycles, these loss cycles where losses start accumulating, they run about 6 to 8 years. We're in year number 5. It's very unclear how long this will last. And it's very unclear with the money games that are played how long this will last. What we do know is we're in a downturn, a real estate cycle, that more and more people are losing than they have in years. Even if there's a home price appreciation showing you flat prices or prices aren't going down, there's a lot more people losing now than have lost in the past. And I think the takeaway here for me, especially in the condo space, is be careful. This could go on for years and years. It could flip. Be a little bit more aggressive on your offers. Take your time. Recognize that there is a financial risk more right now than there has been in the past, but I do not know where prices will go. And with that, I hope you all have a great rest of the day. Thanks for watching. I look forward to seeing you next Saturday.